The bank that refused to stay small. How Access Bank outsmarted giants and changed Nigeria's money game forever. Imagine this. The year is 2002. You walk into a Nigerian bank with less than 20 branches, ranked number 65 out of 89 banks in the country. Analysts call you too small to matter. The big boys, First Bank, Union Bank, UBA, control the streets, the government accounts, the big corporate deals. If you were betting on who would survive the next decade, you would not put your money on this underdog. Fast forward to today. That same bank now stands as Nigeria's largest by customer base, with over 60 million customers, operations in 18 countries, and an asset base that makes competitors take notes during board meetings. Its name is Access Bank Nigeria. How did a back row player become the one setting the pace? How did Access Bank handle competition in a market famous for brutal price wars, regulatory shakeups, and customers who switch banks faster than Lagos traffic switches lanes? This is not just a banking story. This is a survival playbook. If you are an entrepreneur, unemployed, underemployed, or trying to build something from nothing, Access Bank's journey holds raw, practical lessons. No theory, no fluff, just moves you can steal. Welcome to part 1 of our 3-part series, Access Bank Nigeria as a case study in winning against competition. Part 1, The Making of a Challenger, How Access Bank Rewrote the Rules, the Landscape Access Bank Entered. To understand how Access Bank handled competition, you first need to feel the heat of Nigeria's banking arena. In the early 2000s, banking in Nigeria was an old boys club. Trust was built on decades, not innovation. First Bank had been around since 1894. Union Bank was the government's darling. These banks did not chase customers. Customers queue for them. Product? Mostly the same. Savings account, current account, maybe a loan if you had land in Koi. Service? Slow lines, big ledgers, come back tomorrow. Competition was about who had the most marble floors, not who solved customer pain. Then came two things that cracked the game open. First, the Central Bank of Nigeria's consolidation in 2004. CBN told banks, raise your capital base to 25 billion naira or merge, or disappear. 89 banks became 25 overnight. Weak banks died. Strong ones swallowed others. Second, a new generation of Nigerians emerged who wanted speed, digital access, and respect, not just a passbook. Access Bank was tiny when consolidation hit. But instead of fighting to survive, it chose to attack. The merger that changed everything. In 2005, Access Bank pulled a move nobody saw coming. It merged with Marina Bank and Capital Bank. Then in 2012, it acquired Intercontinental Bank, a giant that was 5 times its size. Compare that to how other banks handled mergers. Many bought smaller banks to tick the CBN box. Access Bank bought Intercontinental, not just for size, but for reach. Intercontinental had branches in every corner of Nigeria, especially in retail and public sector. Overnight, Access Bank went from a corporate bank for a few elites to a bank for the market woman in Ibadan, the student in Zaria, and the oil executive in Port Harcourt. Lesson here. Do not merge to survive. Merge to dominate a new segment. While GT Bank was winning with sleek tech for young professionals, and Zenith Bank was king of corporate banking, Access Bank said, we will be the bank for everyone. That positioning shift is key to how it handled competition. Product wars. Access Bank versus the rest. Let us get practical. How do Access Bank's products actually compete? Take the everyday savings account. For years, most banks offered the same thing. Open with 1,000 naira, get a debit card, deal with monthly charges. GT Bank's GTCO was famous among students because it had zero maintenance fee. First Bank's savings account leaned on trust and branch network. Access Bank responded with early savers for children and solo account for individuals who want no-frills banking. But the real shift came with Access More app and Access Closer. While other banks were still pushing customers to branches, Access Bank turned every corner shop into a bank. With Access Closer, your local POS agent becomes your cash point. You can deposit, withdraw, pay bills without ever seeing a banking hall. That move did two things. One, it attacked the competition's strength. First Bank and UBA had the most branches. Access Bank said, "We do not need more branches. We will make the street the branch." Two, it solved a real Nigerian problem, distance and time. For the underemployed youth or market trader, spending 3 hours in a bank is losing money. Now look at corporate banking. Zenith Bank built its name on big-ticket oil and gas deals. Access Bank did not fight them head-on. Instead, it built Access Africa, a payment platform for trade across African countries. While Zenith was serving Dangote, Access Bank was helping the textile importer pay a supplier in Ghana in minutes. Different battlefield, same war. For SMEs, Diamond Bank once owned that space with Diamond Business Express. When Access Bank acquired Diamond Bank in 2019, it did not kill the brand. It absorbed its strength. Today, Access Bank SW Power Loan and Diamond Business Advantage target women-led and small businesses with less collateral, faster approval. That is how you handle competition. If you cannot beat them quickly, buy their advantage and make it yours. The 8 principles Access Bank uses to handle competition. Let us break down the playbook. Here are the first 3 of 8 principles Access Bank Nigeria uses to handle competition. We will cover the rest in Part 2. Principle 1. Expand the battlefield. Instead of fighting on theirs, most companies compete where the leader is strongest. If First Bank owns branch banking, why build more branches to fight them? Access Bank expanded the battlefield to agency banking, mobile apps, and Pan-African trade. Explanation: when you are smaller, head-on competition drains you. Access Bank chose spaces where big banks were slow. Rural access, digital payments, cross-border. By the time others reacted, Access had set the rules. For entrepreneurs, this means, do not open another shawarma spot on the street. With 5 shawarma spots, sell shawarma at midnight to nurses and security guards. New battlefield. Principle 2. Use mergers as a weapon, not a lifeboat. Many Nigerian companies merge because they are scared. Access Bank merged because it was hungry. The Intercontinental deal gave it retail depth. The Diamond Bank deal gave it SME and tech-savvy youth customers. Explanation: competition is not just about your product. It is about your assets. Access Bank acquired customers, data, talent, and branches in one move. For the unemployed person, think of merging skills. Learn digital marketing and tie it to your farming knowledge. Now you are not just a farmer. You are an agribusiness with reach. Principle 3. Turn regulation into advantage. In 2004, CBN consolidation killed banks. Access Bank used it to grow. When CBN pushed cashless policy, other banks complained about POC's costs. Access Bank built Access Closa and turned every agent into a profit center. Explanation: most companies see government policy as a problem. Winners ask, how can this rule make me stronger? For people on Social Security or with little capital, this matters. If the government rolls out a new grant for tech training, do not wait. Be first to apply, first to learn, first to offer that service. We will unpack principles 4 to 8 in Part 2, including how Access Bank uses brand storytelling, customer data, and fearless risk-taking to stay ahead. 3 mistakes other companies make when facing competition. 1. They copy, without context. Many small banks saw GT Bank as sleek branding and copied the orange color and ads. But they did not copy GT Bank's investment in back-end tech. So customers came for the ads and left because of bad service. Lesson: do not copy the fruit, copy the root. 2. They fear losing old customers more than they want new ones. Some banks held on to checkbooks and physical ledgers because our old customers like it. Meanwhile, Access Bank built mobile apps for the next generation. Lesson: if you protect yesterday too much, you lose tomorrow. 3. They compete on price alone. Dropping fees to 0 might win customers today, but if your service is poor, they will leave when someone else drops a fees lower. Access Bank rarely wins on being cheapest. It wins on being most available. Lesson: build value that is hard to price. Lessons learned. you can use today. 1. Start where you are, but think like you are 10 times bigger. Access Bank was small, but took big swings. As an entrepreneur, do not wait for perfect capital. Partner, merge skills, or serve a neglected niche. 2. Your competition is not just companies like you. For Access Bank, competition was also cash, distance, and ignorance. For you, competition might be procrastination, lack of trust, or poor internet. Solve the real enemy. 3. Buy time with technology. Every time Access Bank removed the need for a branch visit, it gave customers time back. If you are underemployed, ask, what can I do to save my customers time? That is your edge. This is only the beginning. In Part 2, we will dig into how Access Bank uses data to predict customer moves, why it spends heavily on brand emotion, and how it handles public failures without losing trust. We will also reveal the final 5 principles and share more product comparisons with UBA, Fidelity, and Opay. If you are building something from scratch, this story is for you. Do not just watch how giants fall or rise. Learn how to move when you are not yet a giant. Subscribe to my YouTube channel where I break down more African business case studies into steps you can use this week. New entrepreneurs, job seekers, and side hustlers, this is your training ground. See you in Part 2. A bank that refused to stay small. Part 2. The hidden playbook behind Access Bank as Rise. Welcome back. In Part 1, we saw how a number 65 ranked bank decided it was tired of being small. Access Bank did not beg for space. It merged, it attacked new battlefields, and it turned CBN rules into rocket fuel. But here is the question that keeps young entrepreneurs up at night. After you get customers, how do you keep them when GT Bank has better apps, UBA has more ATMs, and Opay is giving free transfers? How do you handle competition and the fight moves from the street to the phone screen? That is what Part 2 is about. We are going deeper into Access Bank as playbook. We will finish the 8 principles, compare more products head-to-head, and expose the mistakes that bury good companies. If Part 1 was about entering the fight, Part 2 is about staying in the ring. When the punches get personal, let us continue. The 8 principles Access Bank uses to handle competition. Continued, we covered principles 1 to 3 in Part 1. Here are principles 4 to 8. Principle 4. Win the customer before they need a bank. Most banks wait for you to walk in and ask for an account. Access Bank goes to secondary schools, universities, and NYSC camps. Through Access Early Savers and Access Campus Ambassadors, it signs up students before they earn their first salary. Explanation. Competition is easier when you are the first name in someone else's mind. GT Bank did this well with GTCO undergraduates. Access Bank took it further by embedding financial literacy in NYSC orientation camps and offering exclusive plus accounts that grow with the student. By the time that student starts a business or gets a job, switching to Fidelity or Stanbic IBTC feels like leaving home. For entrepreneurs, do not wait for customers to have money. Teach, help, or serve them for free when they are small. When they grow, you grow. If you are unemployed, volunteer your skill to a small shop today. Tomorrow they will pay to keep you. Principle 5. Make your brand a feeling, not just a building. Look at Zenith Bank. Their brand is corporate strength. GT Bank as brand was fashionable and simple. Access Bank chose more than banking. Watch their ads. It's rarely about interest rates. It is about the woman who got a W Power loan to expand her tailoring shop. It is about the Access Africa trader who now exports to Kenya. It is about accessing dreams. Explanation. In a crowded market, people forget features. They remember feelings. While UBA pushes Leo the AI chatbot and First Bank pushes legacy, Access Bank pushes possibility. That is why during tough times, customers forgive Access Bank faster. They feel emotionally invested. For people on Social Security or starting out, your business is not your product. It is the story people tell about you. Sell the feeling of relief, pride, or safety, not just the item. Principle 6. Use data as a weapon, not a report. Here is where Access Bank quietly beats many competitors. After acquiring Diamond Bank, Access Bank did not just get branches. It got Diamond's digital DNA and millions of retail data points. With that, it built Access More app to do more than transfers. The app studies your spending, suggests budgets, and pre-approves you for payday loan if your salary history looks stable. Compare that to some banks where you still fill a form and wait 3 days for a 100,000 naira loan. Opay and Kuda are fast because they are data first. Access Bank learned from them. Now, if you use Access Closa often, the system sees you as a mini branch owner and can offer you agent financing. Explanation: competition today is not about who shouts louder. It is about who knows the customer better. For the underemployed, track your own data. Which of your skills get the most requests? Which client pays fastest? Double down there. That is your personal algorithm. Principle 7. Be fearless about failing in public, then fixing fast. In 2019, Access Bank's mobile app had days of downtime after the Diamond Bank merger. Twitter was on fire. Access Bank scammed me. Other banks would have gone silent. Access Bank did 3 things. 1. It apologized without big grammar. 2. It gave free transfers for weeks to cool tempers. 3. It showed the upgrades it was doing. Within months, the same app became one of the highest rated. Compare that to some fintechs that hide when transactions fail. Trust dies in silence. Explanation: you cannot beat competition if you act like you are too big to fail. Customers do not expect perfection. They expect honesty and speed. If you are an entrepreneur and you mess up a client order, own it, compensate, and show how you will prevent it next time. That is how you turn critics into loyalists. Principle 8. Build ecosystems, not just products. This is the biggest one. GT Bank has PalmPay. UBA has UBA Marketplace. But Access Bank built Access Africa, plus W Initiative, plus Access Closa, plus Hydrogen Payment Services. What does that mean? A woman can get a W Power loan, receive payment through Hydrogen POS, save in early savers for her kids, and pay a supplier in Ghana through Access Africa, all inside Access Bank's world. Once you are in, leaving is hard because all your tools are connected. Explanation: products compete. Ecosystems dominate. If you are a hairdresser, do not just braid hair. Sell hair products, train students, and partner with a photographer for portfolio shots. Create a world where your customer has no reason to leave. 3 more mistakes other companies make. We gave 3 in part 1. Here are 3 more that kill businesses quietly. Mistake 1. They launch products for the press, not for the people. Some banks launch youth accounts with fanfare, but the USSD code still does not work in Badagry. Access Bank tests Access Closa agents in real markets before announcing. Lesson: if your product cannot survive contact with a real, impatient Nigerian customer, it is not ready. Mistake 2. They treat tech as a department instead of a culture. Many old banks have an ID department. Access Bank made tech the job of every manager after the Diamond merger. That is why a branch manager can suggest an app feature and see it built. Lesson: in your small business, do not say I am not a tech person. If your customers are on WhatsApp, then WhatsApp is your tech. Master it. Mistake 3. They expand without deepening. Some competitors open in every state, but with weak service. Access Bank went deep with agents. One Access Closa agent in Ibadan can serve 5 streets better than a branch 10 kilometers away. Lesson: depth beats breadth. Serve one community like a king before you chase 10. Product face-off. Access Bank versus others. Let us make it real. You are choosing a bank today. What is the difference? For the student or side hustler? GT Bank's Creek 8, simple and cool. But Access Bank, a solo account plus Access More app, gives you a free debit card, 0 maintenance if you go paperless, plus access to quick payday loans once you have inflow. Kuda gives free transfers, but Access gives you agent cash points in your area when network fails. For the market woman or POS agent, First Bank's agent banking is strong. But Access Closa agents get higher commission tiers, branding support, and direct loans to grow their float. That is why you see more orange kiosks in Oyo and Lagos than before, for the SME importer. Zenith Bank is king for big LCs. But if you are importing hair from China or shoes from Dubai with 2 million naira, Access Africa lets you pay in local currency, track it live, and avoid dollar wahala for small trades. Wema Bank SALAT tries, but Access Bank's footprint in other African countries makes settlement faster. For women in business, Diamond Bank started it. Access Bank scaled it. W initiative is not just loans. It is training, markets, and health insurance bundles. No other traditional bank has packaged it that deeply. Lessons learned. You can apply this week. 1. Do not compete. Replace. Access Bank did not make a better branch. It made the branch less necessary. Ask yourself, what annoying step can I remove from my customers? 2. Your best salespeople are your customers. Access Closer works because the agent just shop is already trusted. Who already has your customers' trust that you can partner with. 3. Scale with people, not just money. Access Bank scaled with agents, not just capital. If you are unemployed, scale your time by teaching one person your skill. Let them bring clients. 4. Never stop borrowing ideas. Access Bank borrowed digital speed from Kuda, SME focus from Diamond, and African reach from EcoBank. Then it combined them. You can borrow customer service from that calm food seller and pricing from that busy one. Combine. Win. We are almost done. In part 3, the final part, we will tie everything together. I will show you how Access Bank handles scandals and regulation changes, how it trains staff to think like owners, and I will give you a simple Access Bank model you can copy for any business, even with zero capital. If this is helping you see business differently, do not keep it to yourself. Subscribe to my YouTube channel for part 3, and for weekly breakdowns of African companies you can learn from. We turn big company moves into small business steps. Entrepreneurs, job seekers, side hustlers, the game is not only for the big guys. See you in the final part. The bank that refused to stay small. Part 3. The final playbook and your own access model. This is it. The last piece of the puzzle. In part 1, we saw how a small bank used mergers and new battlefields to enter the fight. In part 2, we uncovered how Access Bank uses data, emotion, and ecosystems to keep customers when GT Bank, UBA, and Opay are all shouting for attention. But here is the real test of any champion. What happens when things go wrong? What happens when CBN changes the rules overnight, when Twitter drags your name, when a recession hits and loans go bad? Competition is not only about growth. It is about survival when the rain starts. Today we close the Access Bank case study. We will look at how the bank handles crisis, regulation, and culture. Then I will give you the access model, a simple 5-step framework you can copy, whether you sell food, sew clothes, code apps, or you are still looking for work. Let us finish strong. How Access Bank handles the ugly side of competition. 1. It treats regulation like weather, not enemy. In 2020, CBN banned cryptocurrency transactions in banks. Many banks just sent a memo and froze accounts. Fintechs packed. Access Bank moved differently. It quickly educated agents and customers on what was allowed, pushed its Access Africa platform for legal cross-border payments, and doubled down on Hydrogen, its payment subsidiary that could serve non-crypto merchants. When CBN did the Naira redesign in 2023 and cash became scarce, queues at First Bank and Zenith Bank branches went wild. Access Bank pushed traffic to Access Close agents and waived some charges on the Access More app. It turned a national problem into a customer acquisition moment. Lesson: you cannot control policy, but you can control preparation. If you are a tailor and government bans imported lace, do you complain or do you become the king of local attire? 2. It builds a culture where staff act like owners. Ask any Access Bank staff why they move fast. You will hear one word a lot: execution. After the Diamond Bank merger, Access Bank did not run to cultures. We trained everyone with one message: we are here to be Africa as gateway to the world. Compare that to banks where front desk staff do not know the latest product, At Access Bank, the security man at the gate can tell you about bubble per loan. That is not accident. That is culture. For you as an entrepreneur, if you hire your cousin to help, does he know why your business exists beyond money? If not, you are competing with one hand tied. 3. It fails forward and tells the story. In 2021, Access Bank system flagged thousands of accounts during an anti-fraud sweep. Many innocent customers got restricted. Social media exploded. Access Bank did not gaslight. It set up emergency response teams, opened weekend service, and the CEO posted a video apology. More important, it shared what it changed so it would not happen again. Result: trust dipped, then recovered stronger. Meanwhile, some competitors stay silent during crisis and hope people forget. People do not forget. They just move. Lesson: in business, you will upset someone. Your speed of apology and correction is now part of your product. Product face-off. The final round. Let us settle a few more debates with real talk. Mobile banking. App GT Bank app is clean and fast. Kuda is free and modern. But Access More is becoming the everything app. You can book flights, pay tax, request a loan, and chat support without leaving. For the underemployed youth who uses one phone for everything, that matters. USSD banking. UBS Magic Banking with Leo works on social media. First Bank *946 is everywhere. But Access Bank *901# plus Access Closa means you can do cash withdrawal from an agent even when there is no ATM. In Ibadan, Ashogbo, or ABA, that is survival. Corporate Internet Banking. Zenith Bank's platform is trusted by big corporates. But Access Bank as Primus Plus now integrates with Access Africa for SMEs doing trade. So a small electronics dealer can enjoy tools that only Dango used to have. That is how Access Bank eats from both ends of the market. Brand trust. First Bank has history. GT Bank has style. Access Bank has momentum. When people think, who is trying new things for the common man, Access Bank comes up more and more. In competition, momentum is a product too. The Access model. 5 steps you can copy today. You do not need 25 billion naira to use this. Here is the Access model broken into steps. Step 1. Pick a new battlefield. Access Bank did not fight 4 branches. It fought 4 agents, youth, and Africa. Ask, where are my competitors not looking? If everyone sells jollof rice at lunch, sell it at 6 in the morning to nurses. New battlefield. Step 2. Merge your strengths. Access Bank merged with banks. You can merge skills. If you can bake and your sister can market, merge. If you are a driver and you understand phones, merge and become the logistics guy for phone dealers. 1 + 1 must equal 3. Step 3. Turn problems into products. Cashless policy was a problem. Access Bank made Access Closa. No cash? No problem. What your customers complain about daily. That complaint is your next product. Step 4. Build an ecosystem around one person. Access Bank does not want just your savings. It wants your loan, your transfer, your child's account, your business pay. Think, what else does my customer need before and after they buy from me? Sell that too, or partner with someone who does. Step 5. Own your story. When things break, you will fail. A client's delivery will be late. Money will mix up. The Access way is to say it fast, fix it faster, and tell people what you learned. That is how you compete with bigger names, by being more human. Final 3 mistakes that bury businesses. Mistake 1. They worship busyness instead of impact. Some companies open branches and hire staff just to look big. Access Bank closes branches that do not perform and moves those resources to agents. Lesson: do not measure progress by activity. Measure by result. Mistake 2. They ignore the unsexy customer. Many banks chased oil companies and ignored market women. Access Bank went to the market. Today, those women are millions of small transactions. Lesson: small money in large numbers is still big money. Mistake 3. They stop learning after success. After buying Diamond Bank, Access Bank could have relaxed. Instead, it studied Kuda and Opay and improved. Lesson: When you win, study like you lost. That is how you stay ahead. Lessons learned for entrepreneurs, unemployed, underemployed, and people on Social Security. 1. You are not too small to think big. Access Bank was number 65. You may be number 1000 in your street. Still, move like number 1. 2. Your advantage is speed, not size. Big companies move slow. You can reply a WhatsApp message in 1 minute. You can adjust your price today. Use that for a partnership, the new capital. You may not have money, but you have time, skill, or trust. Merge that with someone else's. That is how Access Bank became big, by adding other people's strengths to its own. 4. Serve the person everyone ignores. The biggest markets are built on people others call unprofitable. The student, the retiree, the small farmer. Serve them well, and they will carry you. 5. Make yourself hard to replace. If all you do is sell what 10 others sell, you will compete on price and die. Add teaching, add convenience, add community. Become an ecosystem of one. Closing, your turn to access more. Access Bank's story is not about banking. It is about mindset. It is about a team that looked at giants and said, we can do this differently. You can too. Whether you are starting with 1,000 naira or just your phone and your will, the principles are the same. New battlefield. Smart mergers. Solve real problems. Build ecosystems. Own your story. That is how you handle competition in Nigeria. That is how you handle life. This 3-part series is done, but your own story is just starting. If you got value from this case study, do me one favor. Subscribe to my YouTube channel where I break down more African business giants into lessons you can use on Monday morning. We post every week for entrepreneurs, job seekers, and anyone who refuses to stay small. Drop a comment. Which Access Bank principle will you use first? See you in the next story. Let us build. Let us win.